Friends, welcome to this rapid audio revision series on accounting standards of Group 2 Advanced Accounts. I am CA Jayesh Popat from Jayesh Popat's Classes, Kolkata. Please download the revision notes from the link given in the description. Also, subscribe to our YouTube channel and hit the bell button. I hope these revision notes will help you to easily, effectively revise your accounting standards in the shortest possible span of time. All the best for your exams. Thank you. ACE 18 Related Party Disclosures. This standard requires the reporting enterprise to make disclosures relating to transaction with its related parties. The basic objective being to identify the quantum of transaction with its related parties, and which would in turn determine the dependence of the reporting enterprise on its related parties. Also, transactions with related parties are normally viewed with a bias because of the relationship which exists between both the parties. Therefore, the users of the financial statement would be able to identify the nature and the quantum of transactions which have been taking place between the related parties. So basically, this standard would first make an attempt to identify the related parties. So it clearly defines that what are the related parties, and then it has a detailed disclosure requirements which are supposed to be made in the financial statement of the reporting enterprise. First, let us understand that what do we mean by related party. It says that parties are considered as related if at any time during the financial year, if one party has the ability to control or exercise significant influence on the other party's financial or operating decisions. So what are the important terms? It's the ability to control and exercise significant influence in relation to financial and operating decision. Let us understand that how one party is able to control the other party. Control would come in either of the three ways. First, ownership directly or indirectly of more than one half of the voting power. This means voting power comes from holding equity shares. So if you are holding more than 50% of the equity shares of an entity, it will be said that you have control over that entity. Control over the composition of the board of directors. How do you control the composition of the board of directors? When you have the power, right, that without the consent of any other person, you can either appoint or remove majority of the directors of the company. It will be said that you control the composition of the board of directors. When it will be said that you have the power to appoint the majority of the directors, it will come that without you exercising your vote in favor of that person cannot become a director in that enterprise. The second way in which it comes is that being a director in the reporting entity necessarily flows that you are a director on the entity which is able to control it. And third way is that you are able to appoint a nominee director on that entity. Then the third way in which control could come is a substantial interest in the voting power, means you are holding 20% or more of the voting power of that entity, and along with this you also have a power to direct either by statute or by agreement the financial or operating decisions of the enterprise. So in the third point, both should coexist. You should have substantial interest, means more than 20% of shareholding, and along with that you have a power to direct either by statute or by agreement in the financial or the operating decisions of the enterprise. So three ways in which control could be there: ownership of more than 50% of the equity shares of the enterprise, control over the composition of the board of directors, and third, you are having a substantial interest, matlab you are holding more than 20% of the voting power, and along with that you have power to direct either by statute or by agreement of the financial or operating decisions of that enterprise. So the substantial interest, we have already defined that you are said to have substantial interest if you directly or indirectly hold 20% or more of the voting power. Then the next way in which you could be a related party is that if you have significant influence. Let us understand what do we mean by significant influence. Significant influence would arise in variety of way. It would mean participating in the financial or operating decisions of the enterprise, but you don't have control over it. You have participation, but there is no control. So significant influence would arise if you have representation of the board of directors of that company, if you have a responsibility and participation in the policy making process, if there are material intercompany transaction between the entities, there is an interchange of managerial personnel, dependence on technical information, etc. The most common way in which significant influence will arise is holding equity capital, means having voting right. So here the threshold is that if you have more than 20% of equity capital or voting right of the another entity, it will be said that you have significant influence. So to this extent, see, there are two words: substantial interest and significant influence. The definition of related party says either you have ability to control or you have significant influence. But the substantial interest is part of the control, where you have substantial interest, along with it you have power to direct. And the significant influence arises in different way. It is basically your ability to participate in the financial and operating decisions of the enterprise, but you don't control that. It could be in form of representation on BOD, you are in the policy making process, etc. And it also arises by shareholding, and the threshold is that if you hold more than 20% of the voting power of the other enterprise, it will be said that you have a significant influence on that enterprise. Then we look at some more terms. Key management personnel. See, who is a key management personnel? You need to remember ARPDC, right? You need to remember ARPDC. You have the authority and the responsibility for planning, directing and controlling the activities of the reporting enterprise. In that case, you will become a key managerial person, right? You have authority and responsibility for planning, directing and controlling the activities of the reporting enterprise. So who are these persons who have this authority? The managing director, the whole-time director, the manager, right, or any other person in accordance with whose direction or whose instructions the board is accustomed to act. For example, Reliance have various legal entities under it, right? Maybe Mukesh Ambani is not part of director of a particular company, but the board of directors would listen to Mukesh Ambani. So although Mukesh Ambani is not a director in that entity, he may still qualify as a key managerial person. Another important point where which we will note in case of KMPs is in relation to non-executive directors. Non-executive directors are basically those directors who are there from the perspective of corporate governance for oversight. They do not participate in regular decision making process of the enterprise. So these non-executive directors will not be considered as key managerial personnel. But if these non-executive directors are participating in the planning, controlling and decision making process, in that case they may become or they will become key managerial person. Another important definition which we will keep in mind is the definition of relatives. Relative would mean spouse. If there is husband in consideration, the wife. If wife is in consideration, the husband. Son, daughter, brother, sister, father and mother. So the close-knit family will be considered as relative, right? Because they are expected to influence, they may be influenced by the individual in their dealings with the enterprise. Now, three important definition. Holding. A company which will have subsidiaries will be considered as holding. Subsidiary would be in relation to the holding. If the holding company holds more than 50% of the voting power in that entity, then that entity becomes its subsidiary. Or if the holding company has the capacity to control the composition of the board of directors, still that company would become a subsidiary. Fellow subsidiary would mean two companies which have a common holding company. Two companies which has a common holding company. For example, A Limited is the holding company for B Limited as well as C Limited. So this B Limited and C Limited will be considered as fellow subsidiaries. Then associate. In definition of associate, we have to understand that the investing party has significant influence, right? But it does not make them either a subsidiary or a joint venture. Means you have an associate if you are holding more than 20% but less than 50%, that will be your associate. And if your shareholding is more than 50%, it will be basically a subsidiary. Remember this very carefully. You're holding more than 20% but up to 50%, that entity is your associate. If you're holding more than 50% of that entity, then that entity will become your subsidiary. Joint venture would mean that there is a contractual agreement, right, between parties to jointly control a particular entity. It will be known as joint control. What is joint control? Basically, joint control is the contract between the parties to jointly control a particular entity in their financial and operating policies. That will be treated as joint control. Now we will come to, basically there are 5 type of relationship, because AS 18 clearly defines that who are related parties without any ambiguity. Therefore, AS 18 says that AS 18 deals only with related party relationship described in A to E. So there are only 5 points under which you could qualify as a related party. We'll look at each point and I'll explain what does it mean. It says enterprise that directly or indirectly through one or more intermediaries. Intermediary would mean subsidiary. Control right? So enterprise that control the reporting enterprise. Matlab we are talking about the holding company. Enterprises that are controlled by the reporting entity means we are talking about the subsidiaries of the reporting entity, and enterprise which are under common control of the reporting entity means we are talking about fellow subsidiaries. So holding company, subsidiary of the reporting enterprise, and fellow subsidiaries of the reporting enterprise will be considered as related parties, right? I have a very detailed video on this, right? If you click the I button, you will get the link to this detailed video through which with different examples I have explained all these relationships. So if you're doing AS18 for the first time, it will be very helpful for you to go to that video and your concepts will be clear. Second, associates and joint venture of the reporting enterprise means the reporting enterprise is holding more than 20% but up to 50% shares on a particular enterprise will be treated as associates or joint ventures. Investing party in respect of which reporting enterprise is an associate. So if I am the reporting entity, somebody else is holding, let's say, 30% in me. So somebody who is invested in me will be my investing party, and for that investing party I am the associate. So it simply means my associates, and for somebody whom I am an associate, right, both will be considered as a related party. Now we'll talk about individuals. Individuals which directly or indirectly holds an interest in the voting power, which either gives them control, so individuals which hold more than 50%, or which gives them significant influence, or maybe here they will be considering individual which holds more than 20% but up to 50%, and the relatives of such individual will also be considered as related parties. So for example, let's say if Mukesh Ambani is holding 55% in Reliance Industry, right, he's considered related party, right, by virtue of control. If Mukesh Ambani is holding, let's say, 30% in Reliance Industry, he'll be considered as related party by virtue of having significant influence, and the relative of that person will also be treated as a related party. And we have already seen the definition of relative, which covers the spouse, the son, the daughter, the brother, the sister, the father and the mother. Then key managerial personnel will be considered as related party. We've already seen the definition of key managerial person, and relatives of these key managerial person will also be considered as related party. Another last point, important point, enterprises over which any person described in C and D. So in C we have described individuals which has control or significant influence and their relatives. In D we have considered key managerial person and their relatives. So enterprises over which the individual which has control or significant influence, and the KMP and the relatives of these two category exercise significant influence. So these people, if they are holding 20% or more in some other entity, that entity will also be considered as the related party of the reporting entity. Example, enterprises which are owned by the director or majority shareholders will be considered as related party. For example, let's say Mukesh Ambani holds 30% share in Reliance Industries and Mukesh Ambani holds, let's say, 40% shares in Reliance Retail. So by virtue of a common shareholding, right, of an individual, these two entities will become related parties. Now we'll talk about related parties, right, which will not be considered, or the parties which will not be considered as related parties, right. So we'll say following are deemed not to be related parties. Two companies, simply because they have a director in common, they will not be treated as a related party. If there is a significant economic dependence by virtue of significant volume of transaction, that does not automatically qualify as a related party. So a single customer or a supplier, a franchisor or a distributor or a general agent with whom there is significant business volume transaction, merely by virtue of those transactions they will not be considered as related parties. Then there are people with whom an enterprise would normally deal with. They might participate in the policy making and decision making process, but still they will not be considered as related party. Means provider of finance. So somebody who has given a loan, maybe they might have a nominee in the board of directors, but they will not be considered as the related party. Trade unions, public utilities, governments, etc., they will not be considered as related parties. I have clearly stated that only those 5 entities will be treated as related parties. Then even if there is a related party relationship, right, still there won't be any disclosure made in these 3 circumstances. First circumstance, where providing such information relating to related party conflicts with the duty of confidentiality which is bestowed by the statute. No disclosure is required in the consolidated financial statement in relation to the intergroup transactions, and if there are transactions between two state-controlled enterprises, there is no requirement to give disclosures in relation to those. Now we'll understand, we understood who are related parties. Now we will understand that what are the transactions which needs to be reported. So what is the related party transaction and what are the disclosure requirement? Related party disclosure transaction would mean transfer of resources or obligation between the related party. For example, there is purchase, sale, sharing of expenses, there is any bank guarantee given, right? Any sort of arrangement or transaction between related party will be treated as related party transaction, and it does not make a difference even if a price is charged or the price is not charged. Now what disclosures are to be made? First of all, right, if there is control, right, if there exists control, right, the name and the nature of relationship needs to be specified, whether or not there have been any transaction between the here. So see, when we talk about control, we refer only to two scenarios: holding company and subsidiary company, right? So information in relation to holding and subsidiary need to be stated irrespective of the fact whether there have been any transaction between these entities or not. Second, in any other case, if there are transactions between the related parties, then these information need to be stated. What are the information we need to state? The name of the related transacting party, a description of the relationship, let's say A limited subsidiary, B limited associate, right, Mr. X who is a KMP, etc., right? So name and the relationship, a description of the nature of the transaction, whether it is a sale, whether it's a purchase, whether it's an expense, whether a bank guarantee has been given, whether you have paid remuneration to the directors, right? Volume of the transaction would mean what is the amount of the transaction. You need to state any other element of the transaction which would be necessary for the user of the financial statement to know. You need to state the amount outstanding at the year end, right, at the balance sheet date. So debtor, creditor, receivable, payable in relation to the related parties. If you have made any provision for doubtful debt in relation to related party, that becomes significant, because why would a related party not pay? And then if you have written off any amount, if you have written back any amount in relation to debts relating to related party, that also needs to be specified. So by this we are done with AS 18 related party disclosures.